The days of passive home ownership are officially behind us. That's the line that has been resonating for me since I heard my insurance broker mention it about a week and a half ago on a Zoom meeting. And I want to bring you a video on what that means and what you need to know in this new insurance environment to stay ahead of the curve and be successful here in this market. Hey, welcome back to the channel. If you're new here, my name is Hans with the Gunderman Group. I put out weekly content about the East Bay real estate market so you can learn how to be successful here. So if you're new here, hit the like button and subscribe. And if you've been around, thanks for tuning in again. So, what are we talking about? Why does this matter? Insurance is a given, right? Well, unfortunately, not so much anymore. A lot of companies are pulling out of insuring property in the entire state of California, and definitely in a lot of local areas, specifically in areas of high fire zone or flood risk. So what does that mean, this idea of being a passive homeowner versus an active homeowner? Well, in the past, passive home ownership meant that you spent a lot more time looking at the aesthetics, the curb appeal, the location of a home, the utility of it, the floor plan. Not as much time worrying and obsessing about things like the age of the roof, the knob and tube wiring, all of that kind of actual systems and the condition and the age and all of that. And there was a reason for that, because it was such a hot seller's market that you really didn't have an opportunity to dig into the age of that and bake it into your bid. You had to beat the next person because there were so many buyers, money was cheap, everyone wanted a house. It was kind of wild, and it created an environment where people just kind of forgot about that stuff. Insurance was easy to come by. It was actually fairly cheap. It was one of the least problematic things on your closing statement from a cost perspective. It was easy to get. Everyone would underwrite it. Knob and tube wiring, no problem. Old roof, no big deal. Now, not so much. In the last 6 months, insurance companies have really started to tighten their belts, both financially. They're non-renewing properties. They're just not writing new business in a lot of zip codes, or even in some cases, the entire state of California. And as a result, it's creating a really tricky environment for buyers to actually transact. So what is this boiling down to? And why does that matter? Well, it actually matters for the main reason that a lender needs an insurance policy in order to close the loan. They will not give you that loan unless the house is properly insured, because if the house burns down, that's their collateral, it's gone, and if no one can pay for it, the loan is dead. Basically, it's gone. You have to write it off. The money disappears. Poof, it's out, right? So lenders need this. So buyers and sellers actually care a lot about insurability, because that gives them the ability to transact. Now, if you had a cash buyer, they wouldn't necessarily need insurance, but that's such a small portion of the buyer pool that it's unlikely you would find a cash buyer to take on the property and not get insurance. So that then begs the question, what does this active versus passive part have to do with buying and selling real estate? Isn't this an insurance issue? Well, yes and no. What insurance companies look at are a couple things. They look at the obvious stuff like the location. Where is it located? Is it in a fire zone? Is it in a flood zone? Is there an environmental risk of destruction on this property or not? Those kinds of things they're going to underwrite for in various ways. They're also going to look at the value of the property. Some insurance companies will not insure above $2 or $3 million. Some cap it in other ways, relative to rebuild costs or some percentage of average, and there's a lot of property out there that defies those averages, right? So there's the price piece as well, and then there's the condition. And when you're talking about the condition, you're talking generally about what's called the Big Four. The Big Four from an insurance standpoint are your roof, your HVAC, your electrical, and your plumbing. So what they're going to want to see is that those systems are not beyond a certain age. And when you start to look at some of the homes, actually most of the homes that are sold here in the East Bay, you've got properties that were built in the 1920s, the 1910s, the 1800s in some cases, that have knob and tube wiring, 30-plus-year-old roofs, asbestos-lined ductwork with a gravity furnace. Those still exist. And 2-3 years ago, those were selling, getting insured, no problem. not the case anymore. If you got some value out of this, give this video a thumbs up and subscribe to the channel, because I'm going to continue to put out weekly content like this and you're not going to want to miss it. So this is where this active part of home ownership comes in. Looking at the systems, understanding what kind of wiring you have, what kind of HVAC, what kind of roof you have, how old they all are, really matter to the buyer and to the seller, because they matter so much to the insurance company. So what we're seeing right now is, in addition to buyers looking at the aesthetics, the bed bath count, the layout, the lot, they're also wondering and frankly coming out at the open house and asking, is there any knob and tube out of the gate? They're asking about the age of the roof in quantities and ways that they weren't before. And so people are switching gears in their minds and understanding what they need to do in order to, first of all, buy the house and then keep the house insured on an ongoing basis. And because our market has traditionally transacted as is, meaning you get the disclosure packet with all the inspections, with all the seller disclosures, you review it all, and then you bake in whatever repairs into your offer, that's just not quite getting it done anymore. If you want to take your buyer journey more seriously and to the next level, I've created the Ultimate Buyer's Guide, which I will make for free, downloadable down in the description. It's everything that I know to help orient my clients to this market so they can understand the nuances, the norms, the ways of doing business, what to expect as a new owner, new shopper in this market. So if you want that, go grab it down below in the video. It's in the description, totally for free, and I'll email it to you if you just plug in your information. Sellers are having to upgrade their roof or their wiring before they go on the market in some cases. In other cases, they're having to issue credits and work with the buyer to get a multi-tiered insurance policy where they can close, and then, for example, once they replace all the wiring, they step up into this better insurance bracket and get a better policy that saves them a significant amount of money. But where this is all going is it's creating this idea that I need to be a more active homeowner. I can't just buy the house as is, it's all good, no problem. I'm really having to think thoroughly about upgrading the roof and replacing the wiring or the HVAC. And homes that have those upgrades are now much more valuable because the buyer pool is suddenly bigger because of the insurability of it, but also it's less cost for that buyer to take that home on and keep that insurance and maintain it over the years once they take possession. Because there's a lot of cases where you've got, you know, an old foundation, knob and tube wiring, and an old roof, then the insurance company is not going to write you a policy, and then you have to go to something like the California Fair Plan for a while, spend a bunch of money upgrading some of these systems, and then get a new policy in 6 months once all that work's done. But that costs a lot of money. That's a big investment. And so this active role of homeownership is coming into fruition. We're not seeing the offers in the quantity and in the dollar amounts as we were before because of this insurance piece, or because there's an understanding that you're going to have to invest a pretty significant amount of money into the property once you take possession, and potentially rewire or re-roof or some such investment that wasn't a requirement before, was more elective down the line, but now is frankly just a requirement. So as an active home buyer, the things that you need to be focused on are the big four: the roof, the electrical, the HVAC, and the plumbing. What's the age? What are the specific materials? When was it installed? You're going to need to get clarity on those, and you're going to need to then get quotes or bids to replace some of those, especially if it's required by your insurance. And I would also encourage you, before you write any kind of offer, get a quote from an insured. Now, there are some companies that won't give you a final quote until you have a ratified contract, because some of them are so stinking busy that they just can't produce these quotes like they used to. But to the extent you can, do that research up front, because the inspection contingency does have that carve out for insurance. And you might even go as far as to hold a small contingency for insurability, which is becoming more accepted by a lot of homeowners. who are willing to work with people to get a reasonable insurance quote so you can close on time. So hopefully that gives you a sense of something you need to be aware of. Active home ownership. It means not only thinking about the finishes, the layout, the location, the lot size, but also the systems. How insurable is it? What's that gonna cost? How much money am I gonna have to invest into this property beyond a kitchen or bathroom remodel to keep it up to modern standards, to improve the condition so it can be insured over the long run of your ownership. And final note, make sure you get an insurance quote before you write an offer. Please do yourself a favor and do not wait until you're in escrow. You end up with a $1,200 per month insurance quote. It's gonna hurt, it's gonna throw your loan into chaos, it's gonna make everything really, really expensive and complicated, and it's just so not needed. So make sure you do that homework up front. So hopefully you guys got some value out of that. If you did, hit that like button, subscribe to the channel because I'm gonna continue to put out content like this. And if you're ready to take your East Bay buying journey to the next level, I've put together, again, my guide, the Ultimate Buyer's Guide for the East Bay. It's down in the description of the video. Make sure you go download your copy totally for free. It will give you some understanding of what to expect when you're entering this market as a buyer, and give you that sense of what you're doing, what you're walking into, where you're going. And if you want to have a more in-depth conversation, my email is down below. Happy to have a no obligation call, tell you about what I can do, how I coach my clients to be successful in this market, and whatever other questions are on your mind. So without any further ado, we're going to wrap this one up. Thank you for being here. This is Hans with the Gunderman Group signing off for now. I'll see you on the next one.